Welcome to the July 24th, 2023 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets. I'm also president of McGowan Group Wealth Management. This is the team of 10, the team that cares, serving affluent families right from the Crescent in Dallas. You can set your time for a brainstorming session to upgrade your plan and get the team that cares on your side. And this video is proof that we love our clients. Each and every week, scouring the financial markets, and the team of 10 real portfolio managers bringing you the most relevant research and the events of the week, and also what we're doing about it. This is the Dow topping 35,000 with distance. What happened? Two Dow components explain a big part of that. Microsoft came out, and of course, artificial intelligence, a hot button. They said, here's our new subscription model. Well, that sent the stock to an all-time high. That's in our growth portfolios. And Johnson & Johnson. We love medical dividend companies. Johnson & Johnson came out with solid 8% increase in earnings. Looks like they're back on track. And it's a nice dividend as well. The medical dividend side of the portfolio doing well for clients, and it's also inflation friendly. Here we go. How are earnings? S&P 500, you take the unit of the blue chip companies and you say, are earnings going up or down? When earnings go down, present value of future cash flow drops, and sometimes the stock. Sales growth for the S&P 500, you've got almost 20% of the companies reporting 9.4% sales growth. That's pretty good, especially because inflation trailing 12 months is only 3%. 5% earnings above last year. That's actually good news. And information technology, tech is stinking the place up with a 28% decrease in profitability. Wow, that surprised me. And real estate, a 56% increase in earnings. That's impressive. And there's some surprises in the real estate market here in North Texas that I'm going to cover here in the forward slide. Now, this is the NASDAQ. Notice this right here. The Dow had a great week and the NASDAQ dropped the ball here. Two things happening. Rebalancing. 7 companies make up 55% of the NASDAQ, and they're going to rebalance it. How? By selling some of those 7 companies. And the NASDAQ is also getting hit by the rebalancing. This is the NASDAQ 100, by the way. They're getting hit with the rebalancing. That's coming up, but at the same time, investors this week went to value stocks, and that included the medical dividends. This is a lesson in global high yield. Guy calls me, he's a wholesaler back in 1992, brings this fancy British guy by that explained to me what a Brady bond was. That's emerging market countries, at that time primarily Latin America. They had structured a bond that had a treasury backing at the end, but the country of origin pays. Well, that was part of a bailout, if you will, for Chase and Citi and the money center banks. Anyway, it created a new type of bond, an emerging market, and this is an emerging market bond fund. This is the best fixed income track record that I've been able to find for the last 30 years. Well, what is it? You can see the effect of the tightening right here. You could see the pandemic and a quick recovery. Wow. And when you go to 2008, oh, well, look at that. And then it recovered. Recovery tends to be faster than stocks in many cases, and you get paid a lot of interest if you buy it right, with gain potential, compounded return 9.5% for 30 years. Just wanted to cover a successful category that we've been using since 1992. Not without risk, because like when Russia defaults or Mexico defaults, then all the prices come down. But this manager uses it to get bargains. What's this? These are oil inventories at Cushing, Oklahoma. So, crude inventory data. Here is the reason that oil went below 70, because we had a surplus. This is 7 months of surplus. Now you've had 3 months of drawdown in the oil that's in storage. And that means that at some point they're going to be refilling that. And West Texas Intermediate crude hit 76.50 per barrel this week, breaking out of its trading range. So energy infrastructure is also part of the portfolio. Now, what is this? This is your home price here in North Texas. Your home, bad news, went down 10% from the bidding frenzy of the summer of 2022. What's that? Surprise. Wow. Prices are actually up for the year. This is about a 4% increase through 4%. And that was a surprise because everybody thought it was just going to trail off and drop off. Okay, this is to not to. It's a warning, right? This is Carvana. That company has lost over $30 a share since 2016. They have retained losses of minus 30. The stock went to $3.76 in the 2021 frenzy, where nobody cared if a company's losing money. It goes from $3.76 to $3.55, a 99% decline. What's this? They came out and went to the bondholders and said, we're going to give you a new type of bond and restructure, and we're going to sell a whole bunch of stock, diluting the value to the current shareholders to get this deal done. And so they had a huge spike this week. Everybody's like, wow, they're up over 1,000%. Well, if you look at the long-term record and the fact that they've never made money, they're supposed to lose money for the next 2 years on top of it. This is a, wow, it looks like a short squeeze at that announcement, but the shares are actually worth less because of what they did. I'm Spencer McGowan, your financial weatherman, president, McGowan Group Wealth Management. I look forward to our brainstorming session together. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.